Hello and welcome to another episode of Fintech Focus TV with me, Toby. Today I am absolutely delighted to bring to you Beeks with Gordon McArthur and Matt Cretney. How are you both?
Really good. Really good.
Listen, lovely to have you both on the show. Been seeing a lot about Beeks over the over recent weeks and months, and it's good to see another company that's sort of progressed really well over the course of the last year or so. One of the things that I've been seeing as a constant theme through all of this is businesses who've been listening to customer problems and seeing some of those issues. And we're going to explore a lot of that later on. But before we get into all of that, I'd love you to talk a little bit about Beeks and introduce yourselves. Gordon, if I can start with you, can you tell us a little bit about yourself and what Beeks does?
Sure. So Gordon McArthur, I'm CEO and founder of the Beeks Group. I founded the business almost 12 years ago now, and we've spent the last 11, 12 years doing cloud deployments for capital markets clients. Before it was kind of trending called cloud, we were still churning out kind of private infrastructures and the data centers that matter for capital markets clients. So one of the businesses
you made it cool, Gordon.
I don't think we made anything cool. I'm not going to claim that ever. We've grown quite a lot over the last few years, especially. Listed on the London Stock Exchange 3 or 4 years ago now, which was a big thing for us. And we continue to try and cloudify capital markets, for want of a better term. It's a terrible term, but it's one I'm using.
We'll roll with it. And it's been an interesting world for cloud, as I'm sure we'll come into a little bit later on. It's been sort of perfect storm for cloud adoption, which has created its opportunities as well as its problems for businesses. But let's move into that in a second. Before we do that, Matt, please introduce yourself as well.
Yeah, happy to. So Matt Cretney, I'm head of product management at Beeks. I've been here just over a year now. So before I joined Beeks, had really strong development team and sales team, but didn't really have a product function. So I'm really enjoying building that out and bringing products to market. It's been a lot of fun.
And that's something which I really want to touch on as well, because I think that sort of product world has been fascinating and probably the we talked about making things cool earlier on. If there's been one area that I think has been a real boom area of growth for businesses, it's having a great product team and listening to customers and creating those products from it. We mentioned cloud, and I know you guys have just released Proximity Cloud as a sort of game-changing function for the industry. The last 18 months, 2 years has been a absolute changing of the guard for cloud. I think in major banks. We've seen a rapid digitalization of banking services. We've seen, people move out and have to have, really strong and very quick cloud infrastructures, which has created the sort of growth and opportunity that you mentioned before. But Gordon, tell us a little bit about the world as we live in at the moment and what that's meant for Beeks and the thought process behind Proximity Cloud.
Sure. I think the last few years, especially with the adoption of cloud computing, has escalated through financial markets and capital markets, but there's still been some massive barriers. Beeks has had for the last 6 or 7 years a public cloud offering, and the financial data centers, CME, NY4, LP4, where we've offered shared cloud compute connectivity and more recently analytics, but it still causes the larger institutions in particular a real pain in adoption, right? Security and compliance with any type of shared environment sometimes just cannot fly within a bank or a larger exchange or a larger investment manager. So there's still some real barriers to adoption because the hyperscalers are not in the data centers, the financial data centers. They run their own data centers, and you can connect. But if you're running, if you're a sales side, that you need to be in the data centers that the exchange is in or the other participants are in. So there has been a bit of a hole in terms of how do we have a cloud model with a co-location type of offering, right? And for the last 3 or 4 years, we've built out a lot of what we call private cloud infrastructure. So a cloud for a client, right? It might be an exchange, an investment manager, a bank. and we will build it as a kind of bespoke type offering. We have built it as a bespoke type offering that still sits within our space, right? But that again only goes so far. And a lot of these deployments have got 60% similarity, no matter who you're doing it for or what you're doing it for, right? There are only so many low latency offerings and ways of deploying low latency environments. So until a year and a half ago, we didn't have a product team. So Matt was brought in to build that and build repeatable solution and products that are relevant to capital markets clients in the cloud world. So, we launched Proximity Cloud last week. It's been 18 months in the making, but it's actually been 10 years in the making, because what we've done is taken some of our in-house technology that our teams have used to deploy and manage large cloud environments and productized it and put it into the hands of the customer, right? So rather than Beeks hosting and accessing the environment, we pre-build and pre-stage and send the cloud environment to the client. And we've built management orchestration tools around that allow them to just manage it themselves. So a lot of that pain of, well, where does my data sit? Who has access to it? What's the security model that sits around it? Becomes less relevant now with our Proximity Cloud offering, because it's up to the client, right? It sits within your data center space. It sits in the exchange space under your regulation, under your management. You only have access to the data, and it physically resides on that, in that space there. And our engineers don't have access to the data unless, there's a support function and that's agreed and that's shared. So it was really a culmination of listening to our clients, losing some deals because we lost some deals on the back of not being able to do all of these things, and then trying to figure out how do we productize something that takes some of that pain away, but gives a client a cloud environment that's month to month. You're not paying hundreds and thousands or millions of pounds in capex up front. That's pre-engineered, that's optimized, that sits in colo, and that's 18 months worth of work, which will go on for another, for years. It's a kind of landmark product that we've got, stage 2, 3, and 4 already kind of mapping out. So, it's been a busy couple of years trying to get that product to market, and we're happy that we have. And we see it as a kind of mainstay of the company going forward.
How much of it was driven by the events of the last 18 months? I mean, it sounds like this is something which has been in development, from beforehand. But it has, did sort of March last year sort of accelerate the development of what you've been looking at, and I guess customer demand?
Because we had the same problems, right? We signed a number of large deals that we announced to the stock market last January, before the pandemic started. And then we had to go and configure and deploy and, integrate some of these environments in remote locations that we didn't have staff in, right? So some of the pain that we felt as a business trying to get bespoke private clouds out under the restrictions of COVID in countries that you don't know and you don't have your own staff, kind of showed us how and exacerbated the pain of trying to do that. So, we now are going to deploy our own cloud environments using a kind of proximity cloud method where you pre-load the rack, you pre-integrate it, it's all working when the rack arrives and plugs in and you're ready to go. So that pain of having people in data centers, cabling things up, shipping to country support, a lot of it was born out of the pain that we've had over the last 18 months deploying client-side infrastructure.
Absolutely, and Matt, coming into your world, the product pieces come under, as I said before, sort of an enormous scrutiny, I guess, to some extent, where it's become more and more important for people to listen to customers and to provide agile solutions that have that suit a rapidly changing need and set of concerns that people have. What sort of concerns were your customers talking about, and how were you able to adapt to them to provide the sort of quality of product here that seems to answer so many different questions and problems that they have?
Well, I think you touched on the key points in your question there. It's that conflict between trying to be agile that customers were having. They could see how flexibly things could be done in the cloud, how you could spin up a service in minutes, and yet they needed to be in locations where you had to wait kind of months for equipment to arrive. You then had to have people who kind of understand cabling and network stuff. And it was a big pain point, and has been for the finance industry in particular for a long time. So we really saw a good opportunity to bring the best of the cloud to the locations where clients needed to be. And bringing that to market's been a lot about, talking to existing customers, kind of reflecting on what works, what doesn't work in the colo space. Also, putting in place an agile way of working here at Beeks, where we get the network people and the development people sort of working together really well, and we have a good iterative cycle of development where we're not getting too far ahead of ourselves in terms of big long plans sort of years out in the future. It's important to get stuff to market, get feedback on it, and learn from the experience and put that feedback back into the product.
I think that iterative cycle has been really important, hasn't it? About not just saying, and I think this has been a sort of move from legacy software through to a lot more individual and bespoke and tailored solutions to companies to say this has to be something there which is driven by a client and their bespoke needs. I think, Gordon, you mentioned sort of 60% of it is very similar, but there's a lot of nuance in those 40%, and the ability to have a customer come in there and put their stamp and their own way of working on it. It's got to have been important and an interesting challenge as well. Is there anything that you picked up from that particularly?
Well, I think the infrastructure and the network is probably the easier part of it, right? When I see 60% of an environment is kind of common amongst peers, it's really that infrastructure and the network and the connectivity rich, low latency networks. So we don't get involved in applications, right? We're a plumbing company, right? If you like. So the 40% is made at the application layer. Everyone has their own OMS or trading engine or whatever it might be, but it all has to sit on bare metal hosts that have got low latency cards that are connected to a low latency network that then has direct market data plumbed into that same low latency network, right? So there's a common theme in terms of the infrastructure network stack. Once you then get into application tuning and what happens to that application layer, that's in the customer domain, right? Do they deploy on bare metal? We've seen a huge uptake in containerization over the last year, whether it's Kubernetes or Docker, but all of that stuff then sits in the customer domain where they derive business value from that we as an organization just don't get involved in. So that application layer within that stack is a differentiator, but a lot of the stack, no matter who's doing it, is pretty similar, because it's kind of well-worn path now over many years of innovating in that low latency space.
I think it's very interesting that you talked about sort of making, I joked about making cloud cool, etc. But it's been something which I've seen for a long time. I go back to the early 2000s where cloud seemed to be something which would be rapidly moving through. And in other sectors, clouds obviously dominated and move with frightening speed. And it's been a sort of laggard within the financial services sector for a number of different reasons. Security, data sovereignty, data access, business flexibility, all of these different things that I know we've been speaking about beforehand as well. With regards to that sort of perfect storm of it being thrown into the spotlight of the last 18 months, where cloud adoption and digital adoption has been such a relevant piece for people to be forced into. So banking to me has almost been forced into cloud adoption, despite the obvious benefits of cost reduction, of ease of use, of flexibility and all that sort of thing. But it took a sort of fairly seismic thing to make it accelerate in the way that it has over the last 18 months. What does it look like? I'll go to you with this, Matt, first, if I may. What do you think it looks like after, as things settle down? We're not sure what's going to happen over the next 6 months, let alone the next 6 years. But is this a watershed moment for the cloud? Is this now fully ensconced into banking services? Is it a mainstay, or is it a case of right for this moment, but then we'll go back into the same old conservatism that's probably held back some of the financial services sector for a little while?
I think no. I think we're still quite early in the journey. I think there's lots of transition still to happen here, and learning about the cloud. So, I think on the one hand, we see a lot of exchanges and venues making more of their data, even real-time data, available easily, sort of natively in the cloud, and that is going to be interesting to see how that pans out and how that is done at scale. But then equally, some of the experiments, I think, for some of the crypto exchanges, for instance, as they grow in size or importance, we actually see some of that moving out of kind of hyperscale cloud providers and into colo space because of security or performance or control, or just ease of kind of understanding the connectivity path to your customers and kind of owning that connectivity path. So it's going to be, I think there's definitely going to be more services moving to the cloud, but as part of that movement, I think you'll see a bit of friction, and some of the stuff will decide to stay on the colo side, if that makes sense. I don't know.
It does.
But progress.
Gordon, you're nodding there as well. Is that?
Yeah, I mean,
thoughts. Yeah.
Yeah, I mean, the kind of hyperscale, cloud providers that, the majority of people out there think, is the cloud. It's great for many use cases, right? And Matt just touched on one there, storing and downloading and, backtesting or whatever of market data. But, there's still some huge challenges in terms of making a public cloud provider fit for purpose for real, execution, where, you're down into nanoseconds, and, you need support for, multicast data and all this deep technical stuff that there's still no answer to. So that Matt is absolutely correct. There's kind of two paths on this journey, and some of that will lead into that public cloud. But we are making our bet that there's still a huge infrastructure required in colo, that people want to have the same benefits of that public cloud: ease of use, flexibility, turn up down services, month-to-month payments. So while the use cases split off, people are still looking for benefit in both colo type deployments and public cloud environments, and I think that will continue at pace. But I don't think that there's ever going to be a full capital markets, that it disappears into the public cloud for the reasons that we've talked about. So and that's good for us. We hope that never happens, because as I say, we are making our bet on cloudifying that colo infrastructure.
So I'm interested in a lot of the talk that you've had there about sort of low latency, and if I go back to, again, probably the early 2010s and through to 2015, I think probably the most common thing that I was talking to companies about was the race to zero latency and speed. We had a couple of people on the show recently who were talking about sort of the race to speed sort of being almost nullified at the moment for the and a focus really on the usage of data and how important data have become in the sort of cloud story. That seems to be something which is very heavily on your agenda as well, right?
Yeah. I mean, I think the race that the 2008 to 2010 period was, I don't think will ever be repeated. It was the kind of race to zero is almost there. You get these FPGA systems that will, tick to trade in nanoseconds, and I think that's all well, understood technology now. So I think people are trying to get advantages from, understanding the data, consuming the data, getting actionable insights out of it in, relatively short order, and making decisions based on that. Pure speed alone, there is that part there with some of the HFTs, but I think we see a lot of people looking to try and consume data from multiple sources, run real-time analytics on it to make actionable insights in the trading world. So yeah, speed alone doesn't seem to cut it for a lot of market participants anymore.
Yeah, it's a combined act. It's still important, but it's how everything else ties into it. Matt, just looking at the iterative cycle, you spoke about this sort of being the initial sort of offering in proximity cloud, and there's loads of opportunity to sort of develop it, and you're already looking ahead to the next sort of cycles. What else can we expect to see? What are some of the problems that you guys are going to continue to solve, and what's exciting about the future?
We like to focus on the areas that kind of keeps people in those particular colo data centers, and really creates the value proposition to have proximity cloud there. So it's areas like connectivity, making that journey easier. Beeks already has a tremendous team of sort of experienced network professionals who are kind of expert in low latency. And we provide a lot of kind of connectivity services there, but giving users sort of automated access to that connectivity is a big part of our development roadmap, and we're doing stuff very, very near term in that space, and that's going to benefit our clients significantly. And also it's about visibility into the stack. So with the proximity cloud, because it's your infrastructure, there's no kind of smoke and mirrors in terms of, well, we won't tell you what's going on below this level. That's our level. We'll keep that secret. Our financial clients demand a lot of transparency from us in terms of analytics, visibility of the traffic. Really accurate sort of nanosecond and microsecond timings, and we'd like to extend that not just to the network, which we already do with some of our network analytics, but also the infrastructure services as well. But plenty more to come, plenty to keep the product team busy here at Beeks.
He's going to be busy, Toby. Don't worry about
that. Well, it sounds like it's been busy non-stop. I mean, it's a phenomenal sort of story, isn't it? So 12 years ago, you mentioned that you founded the business. You've had a listing in that time. There's been acquisitions. There's been a sort of demonstrable growth of the business. Talk to me about some of the things that you've picked up on that time, Gordon. What's been the sort of secret sauce that has allowed the business to excel the way it has?
That's a good question, Toby. I think we listen to our customers. We learn. The business has pivoted, quite a few times over that period. We started very much in the retail space 12 years ago, but building out virtual machines for some of the larger FX brokers and white labeling it, and that's still part of the business. But the business has had to pivot to continue to grow. Right, we 3 or 4 years after we started taking institutional type business, and then since IPO, really we've been targeting the tier ones, and to do that, you need to have proper process, procedure, track record, and that was a big reason for IPO is, to try and get out, our balance sheet out in the public domain, and the fact that we run the company properly. We go through, audits every, from security, from finance, operational audits. So the business has grown, arms and legs since we started 12 years ago, as you would expect. But we've been consistent, and I think that's the key, right? We grow 25 to 30% year on year. We've always done it. That becomes harder at scale as you get bigger, but it's about listening to clients and adding value for them, right? And becoming, trusted, and building out systems and platforms that don't fail, right? Especially with the advent of crypto now as well, things are 24/7, right? It's very difficult to have platforms that can cope with the demands and the scale of some of the volume changes you see when the markets get busy, that are alive 24/7, and you need to manage maintenance cycles and all that difficult stuff. So I think, we've embraced change when we've seen it, and the business has pivoted, and we'll continue to do that as we see market opportunity. But it's on the back of client demand. It's on the back of listening and working with, market participants, and I think that's been the key.
Yeah, look, it's really interesting you say that, because this has been something that I've been fascinated by. I've often called this my sort of, this last year of interviewing people as a sort of MBA of type for myself, to listen to the sort of common themes. And this afternoon I'm doing a webinar with 4 people who've grown to similar sort of levels over the course of the last couple of years. And it's same themes, that the ability to listen to customer, the ability to be bold and to make changes to your business, and to have a good model there of consistency, and go after opportunities in the market as they arise. And that's a really good thing to talk about. I want to move on to that theme a little bit, because as opportunities in FX sit, we have London and New York very much as the sort of central hubs of the world. The situation in Asia is interesting, because I don't think anyone's really sort of come to the to the fore there as a sort of standout. I know this is something you've got some thoughts on as well. Talk to me about the marketplace out there and what that presents.
I think Asia's interesting. I think Asia's always the kind of land of opportunity, right? I think historically, from an FX point of view, the dominant area was Tokyo, and liquidity all sitting within the kind of T/3 data center over there. But that seems to be changing, and Singapore over the last couple of years, with support from MAS and some of the things that they're doing out there, seems to be winning the kind of lion's share of that Asian footprint, if you like. And that means clients are having to think about Singapore, having to think about Asia a little bit more. I think still 80% of flows are still between New York and London. So Asia is growing, but still probably the smaller side of it. But there's an interesting dynamic going on between the kind of battle between Tokyo and Singapore. And with Hong Kong, we've seen some brokers who were focusing in Hong Kong, and with some of the political issues over there, we've seen them move. So I think Singapore at the moment seems to be the winner in Asia, if you like, to a certain degree. But I think there's maybe not as much flow in Asia as people would hope and would expect, and I expect that to change going forward with more and more banks and brokers heading out into Singapore. We see a lot of demand there, so it's an interesting dynamic and an interesting time over there.
I think even in the last sort of 18 months or so, and the response being relatively robust over in Singapore of those areas that you've spoken about, to the pandemic, even there's probably even more confidence around how they've dealt with it from a political point of view as much as anything else as well. So it makes it very interesting. I could be speaking about this whole story. It fascinates me, and I think it's a really interesting area you guys are focusing on for ages. But Matt, I'm going to sort of point the last question to you, which is looking forward. You've mentioned it a little bit before about the sort of development of the product, and I think it's really interesting about where you're taking that. Talk to us a little bit about where your thoughts are with the marketplace, and some of the things that are going to be on people's radar for the next sort of 12 to 18 months.
I think cloud, which we've obviously touched on a lot, is going to be huge for people. I think there's going to be a continuing exploration of alternative asset classes. Obviously, crypto. People looking at combining sort of the crypto trading strategies with the more institutional asset classes, is going to be huge, and brings its own sort of technical challenges. Crypto has a much more diverse array of kind of venues than we've always been used to in the FX primary market, certainly. So that's going to be a technology challenge for people to deal with. And then beyond that, I think there's a product challenge as well for organisations in terms of how they innovate in this space, and how they attract the people they need with the experience. I think that for us at Beeks, that's something we focus on a lot, and I know our customers do too. The finance world can seem quite forbidding to people, and it can be a bit of a sort of network of people who you already know can do the job, who come in and you always see the same faces. So that's going to be an interesting dynamic as well, in terms of how companies grow and bring in fresh people with a fresh perspective on how to adapt to the cloud and the new challenges.
Yeah, I think that's really, really important as well, and it's obviously my sweet spot there when you're talking about the people side of it, because this is a world now where the world outside of financial services has been very aggressive in finding the best talent alongside what used to be the safe haven of the best talent. It was a no-brainer to move into finance, and with increased competition for the best talent in the world, coming from outside the FS sector, I think companies really have to adapt to make sure it's there. So with so much innovation, so much hyper growth and digitalization within the sector, it's really imperative that companies are making sure they stand out as employers of choice in the space. So very, very, very interesting stuff. Guys, as I could be talking for a long, long time. I've loved having this chat. It's always good to hear businesses that moved in the right way. There'll be a number of people here who I know who are watching, who want to reach out and find out a little bit more about Proximity Crowd. Gordon, what's the best way for them to get in touch with you?
So just it's relatively simple. They can drop a note to sales@beaksgroup.com or talk to our sales team via the main company number, or even our website's got a real-time chat facility. They can talk. They would get navigated through that directly. So however they want to do it, Toby.
Fantastic. Well, I'm sure they'll be there in their droves. Listen, it's been wonderful talking to you. Thanks so much for sharing the story. It's great to actually hear it from the inside. I've obviously seen and read a lot about Beeks over the years, but to get to speak to you and find out about that sort of it's massively inspiring. It's great to hear how well you guys have done. So Matt, Gordon, well done. Congratulations. Thanks so much for coming on the show. And to all of you who are watching, we hope you've enjoyed it, and we will see you soon on another episode of Fintech Focus TV. Thanks a lot.